Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of monthly supply and resistance. In fact, from here, all this previous move to the downside was created, and what we can see now is that the market has just tested exactly the same zone, and from here the market has already started rejecting it to the downside. Now, the nearest support in this case would be this previous monthly resistance turn support here. Now, this market might definitely want to go and test this area to see what kind of liquidity we have inside of it. So from a monthly standpoint, we could expect a correction to this support before then getting a rejection higher and essentially continuing this uptrend that the market has been developing so far. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see that at the moment the market has just created a push lower and then immediately corrected to the upside. Now, if this candle here from a weekly standpoint will close like this, so it will be a candle with a red body and a very long wick, there is a high probability that the next candle might want to fill in this wick. This is a pattern that we see over and over again in the market. In fact, we can see, for example, here, the market created a candle like this, simply bullish instead of bearish, with a very long wick and a green candle, and a green body, and the next candle did fill in the wick. Now, if you're asking yourself why this is such a common pattern, that is because when you have a candle like this, it means that on lower time frames, so for example on a daily, you will have an impulse and a correction, in which the correction is exactly the wick that we see here on the weekly time frame. And after an impulse and correction, you would expect a continuation lower, which is exactly the next candle which fills in the wick. So here on the weekly, we could expect more bearish continuation if we will see a weekly candle close like this in 1 day and 12 hours. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about USDJPY a few days ago when the market was here, and I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market has just given us. And by the way, you will find that previous analysis linked in description, so you can go and check it out for more free education. Now, before we continue with the technical analysis here from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market. And let's check the data precisely for the JPY. Now, what we can see here is that with the last reports, net positions have been massively decreased. We went from minus 99k to minus 130k net positions, with 26,700 shorts added with the last report. However, we start to see that anyway, longs are getting added as well, in a small proportion compared to shorts, but still they're getting added. And that is most likely because as the market has tested that previous monthly high and already started rejecting it to the downside, which was around this area, if you remember from the previous analysis, we could expect a bit more bearish continuation. So institutions have started adding some longs on the JPY. Now, longs added on the JPY means essentially that institutions have been shorting USDJPY because every currency on the spot is traded against the USD. So shorts added means longs on USDJPY, longs added means shorts added on USDJPY. So what this means here is that there is definitely the possibility, since this area from a technical perspective here on the daily time frame is previous daily support turn resistance, at this level, we could expect inside of here more institutional shorting of USDJPY. Now, if that will happen, that would definitely increase the probabilities of a potential rejection to the downside away from this level. So if with the new report, which is coming out tomorrow, we will start to see net positions once again getting increased, meaning that institutions are now moving again back to the bearish side for the USDJPY. That essentially means that we have a good probability of a rejection to the downside away from this level, filling in that weekly candle that we have previously identified on the weekly time frame. Therefore, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.